Welcome to the Deep Dive. Today we're digging into ASML's Q3 2025 results. We'll unpack the numbers, the guidance, and their big strategic plays around AI.
Yeah, it's really a story of balancing that huge AI pull against, well, some pretty tricky global dynamics.
Right. Let's jump straight into the Q3 financials then. What are the headline figures?
Okay, so total net sales landed at 7.5 billion, bang in the middle of their guidance.
And then gross margin.
51.6%. Again, right where they said it would be. Sure, strong execution, doesn't it?
It really does.
Yep.
Especially with all the supply chain noise we still hear about sometimes. Net income.
Net income was 2.1 billion for the quarter. That translates to an EPS, earnings per share, of 5.49. Pretty solid numbers.
Definitely solid.
Yeah.
Okay, let's break down the system sales. That was 5.6 billion total.
Correct. 5.6 billion. And the really interesting part, 2.1 billion of that was EUV systems.
Ah, the high-end stuff.
Exactly. And crucially, that included recognizing the revenue for one High NA system, the first one.
Okay, so High NA is officially contributing to the top line now. That feels significant.
It is. It's like the starting gun for the next generation. And looking at where these systems went, logic took the lion's share, about 65%.
And memory the rest, 35%.
That's right. Plus, you had the installed base management services, upgrades, all that, adding another 2.0 billion.
Right, that steady recurring revenue stream, always important.
That's a good cushion. Now, if sales are the past, bookings are the future, right?
So how did Q3 bookings look?
Net system bookings came in at 5.4 billion. But here's the kicker.
Go on.
3.6 billion of that 5.4 billion was for EUV systems, high-value EUV.
Wow, okay, so over two-thirds of the booking value is for their most advanced, most expensive machines.
Precisely. It tells you exactly where the industry's priorities are, leading edge.
And the logic memory split for bookings, was it similar to sales?
A bit tighter, actually. 53% logic, 47% memory. So still favoring logic, but, memory demand, especially for AI, is clearly very strong in the pipeline.
That strong booking number, especially the EUV part, must be why they're guiding so high for Q4.
Absolutely. That leads us right into the forward guidance. They're expecting a very strong Q4.
How strong?
They're projecting total net sales between 9.2 billion and 9.8 billion.
Whoa. That's a huge sequential jump from Q3's 7.5 billion.
Massive jump, and they expect gross margin to stay healthy between 51% and 53%.
So it's not just volume, it's high-value volume.
Exactly. And installed base management is expected to tick up slightly to 2.1 billion for Q4.
Okay, so if they hit the midpoint of that Q4 guidance, what does that mean for the full year 2025? Are they changing the outlook?
Nope. Holding steady, they're confirming the full year expectation around 15% total net sales growth compared to 2024.
Which puts the target around 32.5 billion.
Yep. Targeting 32.5 billion in net sales for the year with that gross margin around 52%. It shows real confidence despite, everything going on.
And shareholder returns, any updates there?
Yeah, the dividend is consistent. The second quarterly interim dividend is 1.60 per share, payable in November.
Okay, what about buybacks?
So the current 12 billion program, they noted it won't be fully completed this year, but they did say they intend to announce a new share buyback program in January 2026.
Right, signaling continued commitment to returning cash. Okay, let's shift gears a bit, away from the pure numbers and into the market dynamics. The CEO mentioned positive news, reducing uncertainty.
Yeah, and that positive news has two letters, AI.
Artificial intelligence, still the big driver.
Absolutely. It's pushing demand hard for both leading-edge logic chips and advanced DRAM. It's not just a small pocket of demand anymore either.
Ah, right. He said it's extending to a larger part of the customer base.
Exactly. It suggests a much broader shift happening, not just the giant cloud providers building out infrastructure. It's becoming more pervasive.
And technically within the fabs. More EUV layers. Customers are moving away from the older, more complex DUV multi-patterning techniques and just using a single EUV step instead. It simplifies things, but means more EUV tools per wafer.
Which is good news for ASML's bottom line.
Definitely. But it's not all smooth sailing. There's the China situation.
Yes, they gave a specific warning about that, didn't they?
A very clear one. They expect demand from Chinese customers, and therefore their total sales in China, to drop. And the word they used was significantly in 2026.
Significantly. That sounds worrying. China's been a huge market for them, especially for DUV lately.
It has. It's been very strong in 24 and 25. So this expected drop in 26 is, well, it's the big headwind.
So how do they square that? A significant drop in a major market, yet they sound confident about 2026 overall.
This is the crucial part. Despite that expected China decline, management stated they expect total net sales in 2026 not to be below 2025 sale.
Not below. So flat at worst, maybe even up slightly. It all comes down to the product mix shift. They're banking on the EUV business going up strongly, driven by AI demand globally for advanced chips.
While the DUV business goes down, largely because of that drop in China demand due to restrictions.
Exactly. They're essentially swapping lower margin, high volume DUV sales, largely to China, for higher margin, high value EUV sales elsewhere for leading edge nodes.
That's a major pivot, relying on the tech transition to offset a geopolitical hit.
It's a big bet on the strength of the AI-driven cycle and EUV adoption. But the bookings data we saw, especially that huge EUV number, suggests the demand is there to support it.
Okay, that makes sense. This strategic maneuvering leads nicely into their big tech investments. Let's talk about Mistral AI, a $1.3 billion investment in a generative AI company. Seems a bit outside their usual hardware focus.
It does at first glance, doesn't it? But it's all about enabling the hardware. The precision needed in modern lithography is just insane. We're talking nanometers.
Right, tiny errors are hugely costly.
Exactly. So the rationale is that software, and specifically AI, is becoming absolutely critical to controlling the tools, optimizing the process, predicting issues, basically squeezing every last bit of performance and yield out of the system.
So they want to embed Mistral's AI smarts across their whole portfolio. Metrology, inspection, the litho tools themselves.
That's the plan. Increase performance, productivity, customer yield. And it wasn't just a casual investment. ASML led Mistral's Series C round.
For $1.3 billion, getting what, about an 11% stake?
Roughly 11%, yeah. And importantly, a seat on Mistral's strategic committee. It shows how seriously they view AI software as core to their future.
Interesting. Okay, sticking with technology, what about High NA EUV? We know they recognize the first revenue, but how's the actual rollout and maturity looking?
The update there was pretty positive. They mentioned over 300,000 wafers have now been exposed on High NA systems out at customer sites.
300,000 wafers, that's a lot of data points.
It really is, and the feedback apparently is that the platform maturity is tracking well ahead of where the first generation, the low NA EUV, was at the same point in its introduction.
Which should mean faster adoption, fewer teething problems for customers.
Hopefully, yes. Less risk, quicker ramp up to volume production for those next-gen chips. And speaking of adoption,
SK Hynix.
Yep, SK Hynix announced they've started taking delivery and installing their first High NA machine, the EXE.520. That's for future advanced DRAM, so it's happening.
Okay, so High NA is rolling out.
Yeah.
But ASML also made news in a different area, advanced packaging.
Yeah, this is another big strategic move, recognizing that just shrinking transistors isn't the only game in town anymore. Stacking chips, 3D integration, that's becoming huge.
So ASML is getting into the packaging equipment space.
They are. They shipped their first dedicated product for it, the XT.260. It's an eye-line scanner, so using older tech but optimized for packaging needs.
And the benefit.
Productivity, mainly. They claim it offers up to 4 times the throughput compared to existing tools used for these processes. And they said it's the first of several planned products for this space.
So opening up a whole new market segment for them, essentially.
Right. Applying their lithography expertise, precision control to the challenges of stacking chips reliably and efficiently. They see 3D as a major growth vector.
Okay, so putting it all together, strong Q3, very strong Q4 guidance, navigating the China challenge with a mixed shift, investing heavily in AI software, rolling out High NA, and entering the 3D packaging market. What does this signal for the long term?
Well, they doubled down on their long-term targets from the 2024 Capital Markets Day. No changes there.
Remind us what those were.
They're still pointing towards an annual revenue potential of between $44 billion and $60 billion by 2030.
Wow. From maybe $32.5 billion this year to potentially $60 billion in 5 years.
Yeah.
That's massive growth.
It is. And with gross margins expected to expand to somewhere between 56% and 60%.
And the drivers for that huge leap remain the same.
Yes. Continued adoption of advanced logic and DRAM, fueled by AI. The big wave of EUV adoption, both low NA and high NA. And now, this emerging market for 3D integration and advanced packaging adding another layer of demand.
So Q3 really paints a picture of a company managing short-term turbulence like the China situation by accelerating its shift towards higher-value next-generation technologies.
I think that's exactly right. The tech transition, driven by AI and now 3D, is powerful enough to offset geopolitical headwinds and keep them on that ambitious long-term track. 2026 looks like a year where that product mix shift does the real heavy lifting.
Okay, so here's something for you, the listener, to think about. We're seeing ASML move into 3D packaging with tools like the XT.260 and making this huge 1.3 billion cheddar bet on AI software with Mistral. It really suggests the future isn't just about shrinking lines on a 2D chip anymore, right? It's becoming about optimizing the whole system software intelligence, stacking chips vertically. How fast do you think this shift from pure hardware capability to software-driven optimization and 3D stacking will reshape the semiconductor landscape? And what does that mean for everyone else who relies on this tech?
Yeah, managing the complexity, especially the software complexity of 3D integration,
Yeah.
that feels like the next big mountain to climb.
We'll definitely keep watching how that unfolds. Thanks for joining us for this deep dive.